Assalamualaikum and hi. Today, we are going to give you an introduction to adjusting entries in accounting, specifically prepayments. We are going to explain what is prepayments and why we need prepayments. So now, we are going to start our presentation and we hope you guys can lend us your ears. For your information, adjustment entries is the name that we give to the journal that we post at the end of each accounting period. I repeat, at the end of each accounting period. This is to match the revenue earned with expenses incurred in the same fiscal period.
So, there are 4 types of adjustment needed at the end of the accounting period, which are accrued expenses, prepaid expenses, accrued revenue, and unearned revenue, or revenue in advance. But we are only discuss about prepaid expenses and unearned revenue.
In prepayments, goods or services have been paid for in advance. So that means the payment happened back in the past for goods or services that are going to be consumed or delivered in the future.
Okay guys, prepaid expenses is a future expenses which has been paid for in advance, while unearned revenues is the payments that a business receives in advance for goods or services that haven't yet been delivered or provided.
A business pays for annual fire insurance premium in 2 installments. The first payment for 12,000 ringgit was made on 1st April and the second payment for another 12,000 ringgit was made on 1st October. The insurance premium is to cover the period from 1st April of the current year until 31 March of the next year. The fiscal year for the business ends on 31 December every year. Graphically, this can be shown as follows. The shaded boxes reflect the total amount of insurance already paid and incurred by the business by the end of the year, whereas the boxes that are not shaded represent the total amount of insurance already paid but not yet incurred. Come here. I will teach you how to post it to the ledger. The first method, the amount paid for the insurance premium was recorded as an expense at the point of payment even though the amount has not been incurred. So, the first payment was made on 1st April, amount 12,000 ringgit by check. And the second payment was made on 1st October, amount 12,000 by check on debit side as it increased our expenses. So, actually the insurance premium is to cover the period from 1st April of the current year until 31 March of the next year. So, we have to record in the insurance expenses our prepaid insurance from 1st January until 31 March amount 6,000 on credit side. Next, we will record the insurance expenses amount 6,000 in the prepaid insurance account on debit side as it is asset. Next, we have to balance the insurance expenses account. The balance of this account will be posted to the statement of comprehensive income or known as statement of profit and loss. So that's all for the first method. So now for the second method, Yana will teach you. So now I will show you how to record using a second method. Meanwhile, some business would prefer to record the amount paid as a prepayment asset first and then transfer to the expense account after it is incurred. In such approach, the entries are as follows. So, in the second method, we will open prepaid insurance account first. Same as before, we will record the payment for 1st April and 1st October in this account on debit side. Then, in the credit side, we recorded the amount that we pay for insurance expenses from 1st April until 31st December. So, in the insurance expenses account, we will also record the prepaid insurance amount 18,000 ringgit on debit side. Then, we balance the account and we get balance carried down and brought down amount 6,000 ringgit. The balance of insurance expense will be posted to statement of comprehensive income or statement of profit and loss. Halim rents out part of his office building to a tenant who paid 3 months rent on 1st November. The rent is for the months of November, December and January. Total amount received by Halim on 1st November was 9,000 ringgit, which means the rental rate is 3,000 per month. Halim's fiscal year end every 31st December. Graphically, this can be shown as follows. The shaded boxes reflect the total amount already received and earned by the end of the year, whereas the boxes that are not shaded reflect the amount already received but not yet earned by Halim. The first method, the amount transferred to the profit and loss account, which will appear on the statement of comprehensive income for the year, indicates the amount of rent revenue earned by Halim. The 3,000 will be shown as a current liability on the SOFP because it is not yet earned. So, let's show how this works. On the 1st November, the total amount Halim received is 9,000, which means the rental rate is 3,000 per month, and we will record it on credit side. So, the unearned rent revenue for January will be recorded on debit side amount 3,000 because of Halim fiscal year end every 31 December and it decreased our revenue for that time. Next, we will record rent revenue amount 3,000 in unearned rent revenue account on debit side. Then, we balance the account and the balance we got 6,000 will be posted to the statement of comprehensive income or statement of profit and loss. Meanwhile, Halim can choose to record the amount received as unearned rent revenue on 1st November because on that date, the total amount received is not yet earned. If this is so, then the account adjustments will appear as follows. So, for the second method, we will open unearned revenue account first. The payment that we receive on 1st November will be recorded on the credit side because it is liability, so credit will increase. So, the payment that we receive from 1st November until 31st December recorded as rent revenue in debit side amount
6,000 ringgit. Then, in rent revenue account, we will record unearned rent revenue amount 6,000 ringgit on credit side as it increased our rent revenue. Next, we balance the account and we got 3,000 ringgit as balance carried down and brought down. So, the amount in the rent revenue will be posted to the statement of comprehensive income or statement of profit and loss.
Okay guys, that's all from us. Hope you guys can understand what we share.
Thank you for listening.
See you next time. Bye.